You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is back to our usual time, noon Central, 1 p.m. Eastern. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you from theoptionsinsider.com studios here in the heart of downtown Chicago by way of the network upon which many of you have been binging of late. Glad to see so many of you are just finding your way to our content these days. Remember, if you like what you hear, it's more important than ever in these dire times to have a reliable source of information and content on this space. So keep those reviews coming in your platform of choice. Could be Spotify, Apple Podcasts, wherever you get the show. Could even be the app stores for our app. Keep new folks continuing to download and digest our content out there. Again, more important than ever. And of course, keep those questions coming. We do love to hear from you guys. And let's see who we're hearing from on the program today. First, let's dial up the old MIAX hot seat all the way out to Princeton, New Jersey, where we are joined once again by Mr. Shelly Brown, the Executive Vice President over there in MIAX land. Shelly, welcome back to Volatility Views.
Hey, Mark. Glad to be.
And how are things in your neck of the woods since last time we chatted, sir?
Volatile?
That's appropriate.
Yes, it is. Working hard, keeping the ship going in the right direction. Loving the increased volume we're seeing recently. It's been interesting times, to say the least.
Interesting time, to say the least. And that could be literally the title of pretty much every show that we've done for the past 6 months here, Shelly. These are certainly, it's the old Chinese blessing/curse, right? May you live in interesting times. We are all living in interesting times right now.
So true, Mark. So true.
And also joining us, I'm not sure where he's from. Is he from a little town that may have changed America outside Chicago? Is he maybe way down in the heart of Texas? Let's find out. Mr. Greasy Meatball, a.k.a. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Welcome back to the program to you as well. And where are you beaming in from, sir?
I am from one of the 10 towns that changed America. Beautiful Riverside, Illinois.
I thought you were in the process of moving.
We're going to move. Yeah, I'm not moving until the end of September. So you've got me. You're stuck with me in your proximity for another few weeks, Mark.
All right. I knew I smelled something weird coming from out that way, the Riverside way. We'll work through it, though, as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we break down what's going on from a vol trading and trending and analysis and unusual activity perspective. And man, is there a whole heck of a lot of vol to parse here this week. Coming hot off the heels of yesterday's big turnaround, multi-percent sell-off across pretty much all of the major indices. Now, before you get all up in arms, we're still firmly above 3,000 in the S&P, still at about almost 3,400 out there, and most of the other indices still not that far away from their all-time highs out there. So we could have many more days like yesterday, and we still would be very, very lofty here for the year. And today is not quite as bad as yesterday, but another day in the same ilk. Blood red on the screen yet again. Most of the major indices off well over 1%. The Dow is the laggard today, off about 1.3%. S&P, as it is wont to do, is the Goldilocks out there, off about 1 2/3%. And the tech-heavy NASDAQ, once again, leading the charge to the downside. It was off nearly 5% at one point yesterday. Today, it's at about almost 2 3/4% to the dark side. Of course, some of that sell-off is mitigating a little bit because we're seeing it reflected in the vol products. Coming in right before showtime, we saw vol hot and heavy out there. VIX cash was north of the 34 handle. Spikes was up almost at 34 as well. And now that the show has kicked off proper, we're seeing vol come in a little bit. VIX cash at about 31, and it was at about 31 3/4. That puts it up about 7 1/4 handles from last show. It was up almost 10 handles from last show at one point, but now the worm has turned a little bit again. Now it's up nearly a point from there. So it's up about 8 1/4 points. So I guess it's like that old saying about the weather. If you don't like what you're seeing, wait 5 minutes out there in the vol camp right now. Spikes was threatening 34, then it came down to about 32 3/4. Right as the show started, that put it up about 8 3/4 points. And now as we're talking again, now as the show has kicked off proper, it's up about another 3/4 of a point again. It's up about 9 handles to about 33 1/2 out here. So a lot of interesting stuff to parse. And our old friend VVIX, which is the vol of vol, we know that's moving down to about, or I should say up to about 124 1/2. That's up about 7 points from this time last week. So a lot of vol to parse in the space. A lot of good stuff to talk about. Speaking of good stuff to talk about, before we dive deep into all things VIX and spikes, you got the numbers. We've been crunching a lot of numbers this week. We talked the OCC numbers. Earlier this week, we talked CME numbers yesterday on TWIFO. Now we got the MIAX numbers coming in hot off the presses here to kick off the show. And it seems like, SHELLY, spoiler alert, things are a little hot and heavy over there in your neck of the woods. I'm looking at your overall market share for equity options. That's, of course, the percentage of overall equity options flow that's going through MIAX these days, listeners. And last August, SHELLY, you were about 10.3%. This August, over 12%, 12.2%. So a big influx going on in MIAX land. What's cooking in your neck of the woods? What voodoo are you doing off the show here, SHELLY, to get all this flow heading your way?
Well, it's not voodoo. That's not one of my areas of expertise. I think it's a recognition of a number of things. The quality of the systems, the quality of the customer service, the firms love it. If you look at September month to date, we're actually running about 16%. Emerald volume is way up. MIAX volume is up. Pearl's holding its own. So we're really pleased with the progress we're making on the exchanges.
Now, how crazy is that? You're right. So I'm looking at the numbers here for the daily. You guys are pushing 16%, 15.3% roughly record new daily market share. And all of this, SHELLY, with the future still in limbo there for spikes. Imagine if the spikes was trading, what you'd be pushing over there, sir.
That would be wonderful. But the volumes you're looking at are equity options volumes, so we exclude from that all the indexes.
Oh, that's true. That would be an index product, yes.
About 15.8 today. We've been running about 18 to 19% in SPY across 3 exchanges. The other thing is the volumes are up significantly, not just because of the volatility, but the stock splits that have occurred in Apple and Tesla has pumped probably an additional 2 to 3 million contracts a day into the markets. just as a result of those splits. Much higher Apple and Tesla volumes.
Isn't it amazing? Apple in particular, Tesla a more recent addition, but Apple for the better part of the last decade has been the gift that just keeps on giving to the options markets and to the brokerage firms around the world. I've said it many times, what the hell would large brokers have been doing for the better part of the last decade if there was no Apple and a handful of other names to really, for their audience to sling? They probably would have all gone out of business a long time ago. One of the unheralded discussion points of the halo effect around Apple is the impact it's had on trading. And now Tesla you can throw in that range as well. As controversial as it is, it's certainly driving a lot of flow out there these days. Mr. Meatball, same question for you, sir. Obviously, it's been a crazy week, a tumultuous week, a lot of vol on the screen. If you don't like what you see, wait 2 minutes because that vol is going to change. What's been lighting up your tape and the tapes of your crazies over there in the trading legion, sir?
What we've been seeing is kind of what we've been talking about for the last couple of weeks is, the NASDAQ getting absolutely smacked while the Dow does all right and the S&P does, a little worse than the Dow because of, a lot of money coming out of tech. Tesla has lost about, 30% in a week. Zoom's gotten face punched. Apple's gotten face punched. The other big fives also kind of beaten down. Meanwhile, we're seeing money flow into XLF, XLE, even some of the mid-cap banks. You're seeing a seismic shift in flow. Money needs to go somewhere because it's not going to make anything in bonds. But it is absolutely running from a lot of the technology names, and it's going to be very interesting to see how the next few weeks play out. Does money just jump right back into a lot of these names, or are we in a spot where money is going to start being a little more thoughtful about where it places itself, or do we go right back to the chase in a couple of weeks or a couple of days? Today feels like we're off the lows, but wouldn't be surprised to have a little bit of an ugly close and, give people a long weekend to think about their stock holdings. And you have to ask, what are they going to want to do with all of that? And my guess would be that Tuesday could be another comeuppance. If things close lower today, look for Tuesday to be potentially as bad or worse than today and yesterday.
Yeah, I hear what you're saying. If past this prologue, I don't know if we can count on folks turning to rationality and deciding, let's stay away from our tech holdings. If anything we've seen this year is that they'll flock back in at the earliest chance. If they loved Apple at nearly 140, they got to love it at around 117. It's the screaming buy of the century, of course. So that's probably what we're going to see in all things market land. But I know you've been beating that drum for a while. We've been talking about it on the option block as well, kind of the bifurcation, the stratification of the market, if you will, from the FANGs and the top upper echelon of these tech names and just about everything else. If you listen to our option block show for the last month or two, particularly the odd block segment, you've noticed a lot of these smaller names we've been profiling there all really peaked right at June 8th. June 8th was kind of the magical day for the rest of the market, and none of them have really been anywhere close to those highs ever since. And yet the FANG names continue to run. They lift the rest of the market with them, and it gets all the headlines. But June 8th was kind of the top for a lot of the middle portion of the market there, and certainly the last few sessions haven't really added to that here. Let's see what's adding from an overall vol perspective and vol products. Get out to the futures land. This is obviously a hotly contested area of the space. We'll get to all the things in VIX futures in a second. But Shelly, you're with us here. I know you're busy cranking away over there at a bunch of different projects right now in MIAX land. One of the big ones our audience is obviously interested in, of course, is all things Spikes futures. I'm wondering if you can give us a hint, an update, a tease of any new nuggets or morsels they can sink their teeth into on the Spikes futures, or maybe even the Viking front, sir.
Viking? V-Spikes is...
I said Viking, didn't I? I meant V-Spikes.
You did. You keep trying. I understand. The reality is it's in production. It's not being published yet. We're going to just watch it for a few weeks. It's also been an interesting number to watch this week for sure. But that's getting close. Futures, I can't really say a whole lot about it other than I still think we're close. I know I've been saying that for 6 months now, so I'm done trying to speculate on when it's going to be relisted, but I do believe it's coming sooner rather than later.
I took a poll. Shelly, I took a poll over at the SEC and at the NFA, and what they told me was, if Spikes had called it Viking, we would have already approved it. But we like the name so much, then the fact that they went with V Spikes, we're going to hold them up a little bit longer just to prove a point.
Yes.
I wish I had known that 6 months ago.
The regulators, if nothing, are not brand sensitive. That's kind of what they key off of. We all know that branding is job one over there at the SEC and the CFTC. Well, at the very least, Shelly, you have to give us access to the behind the scenes link for V-Spike so we can start analyzing it in our show here and rotating it in. I promise I'll stop the meatball from calling it Viking, at least for the foreseeable future. I can't stop him from wearing his cool Viking helmet on the show, though. That's up to him. Moving on out to all things VIX futures. Right now, this has, again, been pretty much our talking point of the year, the VIX futures term structure and what they're pricing in. It goes all the way back pre-pandemic when we were looking at this back in January, listeners, and saying, man, this is kind of juicy for the election. That was all the way back in January. Of course, we all know what happened subsequently. A lot of other vol intervened, but that election premium rate remained stubborn, remained steadfast throughout all the other madness that's been going on. In fact, it exacerbated itself throughout all of that, which is kind of interesting. And coming into today's show, again, it's whipping and flying all over the place. That front portion, the cash, is quite juicy. Dare I say it backward out there. Again, it's flopping all over the place. It has caught up with the rest of the futures. Remember last week we were talking about pretty sizable gaps still between the futures and the cash. A lot of that has gone away because the cash is moving so hot and heavy right now. I mean, that front future coming into showtime was pretty much unched to the cash. They were at about equal points. That puts it up, about 2.5 points difference from where it was last week and even more the week before. The AAPL future, remember, that one had a very, very steep premium out there. That's come in a little bit as well as the cash continues to move up. The no future, that bump is almost, I wouldn't say vanished, but it is a lot closer. It's about 1 2/3 of a point premium to the cash now. That's about 4 handles lower than what it was this time last year. And obviously not all of that is coming out of the no future. Obviously it's just the cash moving around willy-nilly right now. But still, also of interest, we've been talking a lot about the Jan future out there and how much that's pricing in and how that's kind of a little bit scary because that juice is obviously pricing in a lot of electoral uncertainty going into Inauguration Day itself. That's at about 2 1/3 of a point premium to the cash. That's about almost 6 points lower than it was this time last week as the cash has just swung. So, yeah, we've seen a lot of interesting movement out there. Also a lot of interesting analysis of this. A lot of you guys hit us up with this article. We saw it, of course, ourselves as well. Bloomberg going into this, calling this U.S. election bump in the VIX futures the worst event risk in VIX futures history. Now, they looked at it through a very specific lens. It wasn't just look at the bump in the AAPL future. No, they actually looked at it through a bit of a time butterfly, a sep-AAPL butterfly, where they're obviously buying the wings, selling 2 of the guts there in AAPL. And if you look at it through that very specific lens, as this one strategist from Bloomberg, Cameron Kreis, mentioned, he says here, that's the highest premium they've ever seen, of course, outside of a few specific days, and they mentioned one of them here, March 8th. That's the problem looking at these very specific lenses, is that there's always going to be one other day that probably intrudes on that. But excluding a couple of days around settlement, that's the highest they've seen for this particular strategy ever in the history of VIX futures. So a lot of interesting stuff to parse there. Mark, obviously a lot of people have been gnashing their teeth over the VIX futures term structure. What are your thoughts here on what we're seeing, how juicy the cash is right now compared to the futures, and also what Bloomberg terms the worst event risk in VIX futures history, sir?
I don't know if I'd call it the worst event risk in history, but it's definitely the kind of craziest presidential election. And really what I think is causing this is the whole mail-in ballot. The Bloomberg was out saying, hey, maybe there'll be, maybe one person will win on election night, and then 2 weeks later we'll have somebody else win. And that is, I think, throwing VIX futures for a bit of a loop. The idea that we maybe won't have any clarity on who the president is when we launch. I think the more interesting piece is kind of unilaterally how vol is up so much over the last few days. If VIX futures end up today up, it'll be 10 days in a row of them going up. Yesterday marked 9 days straight of September and October futures going up. That is unprecedented. And, almost as crazy as some of what we saw in Apple and Tesla and some of those names. The October future is gonna waltz up to 40. The September future is 35, and we're still in a contango. I mean, it's really impressive the way the futures have just kind of moved in lockstep with the cash index. And so it's really stunning what's happened over the last few days. And it just goes to show you how sensitive implied volatility is right now to everything going on in markets.
Sensitive indeed. Let's see what is going on out there from an overall action on the options front perspective. Again, spikes, we're waiting for those futures and the Viking/V spikes to really juice a little bit of analysis out there. Moving on to VIX options here. Exactly 300K here in terms of where the paper is as of a few seconds ago out there. So that's looking pretty robust, especially when we were looking to threaten to break 300K to the dark side in ADV not too long ago out there in VIX options. So was kind of languishing out there. Now things starting to heat up a little bit. The ADV is up to nearly 400,000, about 386,000. That's up about 60,000 contracts from last week. So a few things have been trading this week. Let's look at the top positions out here in VIX land right now. Actually, if you're wondering the top 10, how it breaks down, it's 50-50 calls to puts right now, listeners. So a very even breakdown out here. 78,000 is all it costs you to break into the top 10 in VIX land right now. So that's still showing OI pretty light out there. That gets you to the NOV 65 calls. Number 9, also 78,000 of the October 25 puts. Then we've got number 8, 83,000 of the September 23 puts. Number 7, all the way out to our funky strikes, our Jan 150 calls for 87,000. Then number 6, 98,000, almost 99,000 of the Jan 75s. Then we go back to still 99,000. Haven't even broke 100K yet. We're at number 5. 99,700 of the Jan 40 calls. Actually, number 4 also. 99,900 of the Jan 27 calls. All the way up to number 3, listen. I can't remember the last time we've seen that. To break 100,000 in VIX land. That gets you to 101,000 of the SEP 21 puts. And then 146,000 of the SEP 24 puts. And number 1 with a bullet, 173,000 of the SEP 20 puts out here. That's a total of about 5.5 million contracts open, about 3.25 million on the calls, and about 2.25 million on the puts. Let's look at some of the action here from today really quickly. Let's see. Today, actually, about 300,000 contracts on the tape. With the most active, the biggest trades out here, the most active contracts. The SEP 70 calls with about 21,000 contracts on the tape. The SEP 35 calls with about 12,000. And the SEP 60 calls with about 11,000 contracts on the tape. So 300K, but not a lot of big prints on the tape for that one out there. Yesterday was obviously the big day out there. 947,000, pushing 1 million contracts in VIX land. Obviously, that was the big worm turning moment, at least for recent history here. We'll wait to see if that's the big worm turning for the market out there. But close to 1 million contracts on the tape. The most active contracts yesterday, the Jan 47 halves with 60,000 almost even on that, followed by the NOV 75 calls, 32,000, and the SEP pars, back up to the par strike. Interesting. 31,000 there as well, and 31,000 as well of the Jan 35 calls. So we're all over the map yesterday from a strike perspective, listeners, which is kind of interesting. And then the SEP 40s, 30,000, and almost about 28,000 and change of the DEES 40. So strikes all over the board yesterday in VIX. Wednesday, a lot lighter, 393,000, about 21,000 of the Jan 75s, 20,000 of the Jan 150s. Back off to our favorite strike out there. 20,000 as well of the NOV 65s and 20,000 of the NOV pars. Maybe a bit of a funky roll out there from NOV to Jan. That would be interesting timing if that was indeed the case. But the volume certainly lines up pretty nicely out there for all of those. A few hundred contracts apart for each. Tuesday, 396,000 contracts on the tape. The big prints, 51,000 of the NOV 65 calls and the Jan 75 calls for about 50,000 each. So two of those accounting for over 100K just there in those two most active contracts. So pretty much a quarter of all the day's paper in those two contracts. And then Monday, a pretty light day, 284,000 contracts. The most active contracts were the SEP 75s with about 22,000 and 20,000 of the DEES 23 puts. So an interesting week, kind of trading all over the place. Par calls, 150 calls, 75 calls, 23 puts. Is kind of pick your poison where you want to hang your hat on the strike selection, which makes it kind of interesting. Mr. Meatball, I know your crazies in the Pitch Chat and the Legion were probably looking at a lot of stuff. What was coming across your radar, and what, if any, interesting prints did you notice in VIX options this week, sir?
Well, the first thing that really struck me when you were going through that list, when was the last time the top 3 holdings of VIX were puts? I mean, I don't know that that's ever happened. And I also noticed that the ratio of puts to calls has gotten really, really, really light, in that there's a lot of put holdings in VIX. I'm wondering whether we have a lot of people betting on near-term mean reversion that maybe are going to be a little disappointed.
Speaking of mean reversion, there's been a lot of pontificating out there about maybe there was a whale out there in the NASDAQ, and interesting activity. I think CNBC and a few others talking about perhaps SoftBank was actually on the flip side of that was coming in to buy a lot of upside in these tech names, in which case maybe not the best couple of sessions for them out there. They're terming it $4 billion worth of options on stocks like Amazon and Microsoft, but also other names. Shelly, I know this one came across your radar. You like a good whale or two story out there. Any thoughts on this, and as well as anything else catching your eye out there these days, sir?
Oh, this is a pretty incredible story. It just came across CNBC about a half hour ago. I'm not sure what the time frame is for when they were making these purchases, but they've made regulatory filings recently that disclose the purchases. Certainly that could be a lot of the run-up in the market, as well as pushing up volatility with the purchase of all these out-of-the-money calls. You have to wonder what they're thinking. I also wonder in the story, when they talk about $4 billion, is it $4 billion in option premium or options covering $4 billion in shares? I assume it's the latter, but it's still a huge position if it's real.
Yeah, the journalists like to sometimes conflate notional and premium, a bunch of other things out there. But you're right. It's a sizable amount. Of course, they're also saying that Vision Fund, the one they're attributing this trading to, is about a $100 billion fund. So if that's the case, that's about 4% of the fund, which would be a sizable bet. But also, if we're looking at we've been hearing a lot of people talking about maybe dialing back from stocks a bit and instead putting some of that exposure into calls. So you get to play on the upside, but also you have the rest sitting in maybe cash or something else. I haven't looked at the prospectus for this Vision Fund. I'm not sure if they're doing that, but certainly the calls would fit into that narrative. Mr. Meatball, are you buying that they're just gobbling up the market, or you think maybe they're doing a little bit of stock substitution and actually maybe getting the heck out of Dodge a little bit?
That would be my bet. SoftBank already holds a ton of tech holdings. Them taking some of their tech holdings, dumping them, and buying some calls to protect. I think that was the majority of a lot of the big paper that we saw over the last week, was people doing that because, frankly, you look at where a lot of these names were priced. It's hard not to be interested in doing something along those lines. The vol. Think about this, and I pointed this out yesterday. The 5 biggest stocks in the S&P 500 all have implied volatilities in the high 40s, low 50s, or even as high as the 60s. Think about that. That is crazy.
That's like a biotech or Bitcoin. They both have all in
but these are Apple was a $2 trillion company with a 55 implied volatility. Think about that, folks. I don't mean to get so excited, but I don't think a lot of the world recognizes that the amount of protection and upside call buying has pushed these vols to a level where they're more expensive than they are ahead of earnings. They're more expensive than really, when was the last time? Apple was maybe a $4 stock the last time its fall was 60. This is like uncharted territory for mega caps. I mean, when in 2008, when ExxonMobil was reporting insane earnings, or 2007, right? And it was shocking that it was $400 billion in market cap. Its implied volatility was in the 20s. So, a lot of what's going on feels like vapor. It does not feel like it's real. And the implied volatilities are trading that way.
Yeah, think about that. That's insane. That is the largest company in terms of market cap on the planet. Apple, at one point last year, I'm not sure if it still is because it has sold off a little bit, but at one point it had a larger market cap than the entirety of the Russell 2000. So you can add up all of the Russell 2000 and you wouldn't even get Microsoft. And that enormous behemoth of a name is trading at the same vol level as roughly what Bitcoin's was in the mid 50s recently, maybe a little higher now, up to 60 recently. Remember, that's a product that was getting lampooned everywhere. You watch a show like Silicon Valley, they have running jokes about how volatile Bitcoin is. That was about a 65 vol. That wasn't that much different. So Apple is now at a same vol level, the largest company on the planet at the same vol level as Bitcoin and some of these other highly volatile names, highly volatile commodities, small biotechs. It takes a lot to get even a small equity up to a sustained 60-plus vol, let alone the behemoth that is Apple. So that is certainly, I think, food for thought out there as we roll on into another vol product a lot of you guys love or perhaps love to fade. This is our old friend VXX. The fade is not on this week, listeners. Go figure, as vol has exploded. VXX back up to the upside here. Up not quite 6 handles, about 5 2/3. Up to about 31 3/4 coming in. Actually, just past 32 right now, so it's up again. I stopped to take a breath, and it continues rallying to the upside. That puts it up nearly 6 handles, over 32 right now, about 32 and change in VXX land. So, wow, how that 30-22 put spread was looking good. Of course, it went off the board already now, but that one was looking good. Right now, not so much out there. Decent paper in VXX land out there today as well. Coming into showtime, there was about 370,000 contracts on the tape out there. That's well north of the ADV, which is about 250,000. That in and of itself, the ADV, is up about 40,000 contracts. And you know what? Since the start of the show, VXX has been trading it up even more. It's up to about 450,000 contracts out there right now. So very hot paper out there in VXX land. Let's see what the big prints are out there in VXX today. The most active contracts right now are the SEP32s with about 16, almost 17,000 contracts on the tape. Not exactly surprising. That's the at-the-money call right now, followed by the SEP33s with about 16,400, and then the SEP35. So strip of calls here in the most active contracts today in VXX, listeners, about 16,000 of those. Then we got about almost 15,000 of the SEP25 puts and about 11,000 of the SEP31 puts. So in the top 5 most active, 3 calls and 2 puts out there. Let's see what we're looking at from an overall top positions. By the way, Mr. Meatball, close your eyes because we're going to play your favorite game. We're going to play Where's Caldo. We're looking at the top positions in VXX right now. Where do you think our first call lands on the list? What place? And then for bonus points, what do you think that call is?
All right, so the highest call is going to be
the first call on our list. Where do we come across?
The first call on our list is going to be 8. The highest call is going to be 4, and I'm going to say in VXX we have the September 35s, and the September 35 calls.
Not bad guesses. You got the placement right. It is number 8 for the first call on the list, but it was the SEP 27s, a little bit in the money here. Of course, that was in the money. I was out of the money this morning, so I guess just wait a few minutes in VXX land. But not bad, Mr. Meatball. I'll give you, I guess, a half point. You got the placement right. I'll give you a full point. What the heck? I'm charitable out here. The other one is just bonus points, guessing what the actual option is. Let's look here for ourselves. The top 10 hot positions out here in VXX, listeners. Cost you about 17, almost 18,000 contracts to break into the top 10 in VXX land. So it's getting a little heavy, but still not a lot open out there. We've seen bigger positions out there in the past. SEP 21 puts is at the bottom there, number 9, 18,000 of the Jan 10 puts. Wow. That's maybe a bridge too far, at least for right now. Of course, Jan's a long way away. We have a lot to see between now and then. Number 8, Mr. Meatball's favorite, 18,700 of the SEP 27 calls, our first call on the list. By the way, if you're wondering, it's 70-30 puts to calls in the top 10 in VXX right now, listeners. Number 7, 20,000 almost even of the SEP 35 calls. Number 6, 20,300 of the Jan 22 puts. Number 5, 26, almost 27,000 of the SEP 25 puts. Number 4, 28K of the SEP 24 puts. Nice little juicy put strip going up here, listeners. Number 3, 28, almost 29,000 of the SEP 23 puts. Number 2, our final call on the list, the SEP 30s. Not even a at-the-money call here. Interesting. And number 2, of course, today's paper might change that. A lot of 32s going up right now. And then number 1 with a bullet today, 30,000, almost even, of the SEP 20 puts. Total of about 1.6 million, about 800K on the calls, and a little north of 800K on the puts. So pretty even in the OI perspective as well, calls to puts out there. And, of course, just for our old friends been on the show a few times, Mr. Lincoln, he likes it a lot. Seems like a lot more of you are starting to like this product as well. So we have to start putting into the rotation more. This is our old friend UVXY back up to the races here. It was up, about almost 6 points to about 27.5 coming into showtime. Now it's up almost 7 points. It's at almost 28.5 right now. So UVXY has been ticking up quite a bit out here during the show, and a lot of paper out here as well. This is another thing we've been watching as, TVIX has kind of gone the way of the dodo. That obviously wasn't optionable, but it was in the same kind of category out here. Now we got UVXY as kind of the last of Mohegans, last of the products out here you can really use from this perspective. And it is optionable, so it has been ticking up quite a bit of late from an overall ADV perspective. It's up about another 27,000 contracts in an ADV this week, up to about 123,000. Obviously, some of that is just the influx of interest in vol right now, but also in general, for the better part of the last month, ever since we saw TVIX really going the way of the dodo, we've seen UVXY starting to tick up. And let's see, today also a pretty active day. There was 250,000 contracts on the tape come into showtime. Now it's up to about 310. So that's pretty much almost 3x their ADV out there right now. So a pretty active day in UVXY. Let's see what the hot, most active contracts are out there right now. It's the SEP 30s, so a little bit out of the money calls with about 21, almost 22,000. That's a pretty hefty active contract for a UVXY, a product that's only doing 123,000, and not that long ago was doing about 60, 70,000. So 21, almost 22,000 of anything is pretty active out there. Then we got the DS10s. That's an interesting one as well. 15, almost 16,000 of those, and about 15,000 as well of the SEP 30s. Eerily similar paper there, so maybe for size at least, maybe there's a bit of a spread going up there, and about 8, almost 9,000 of the SEP 29 calls. So obviously UVXY getting to be a little bit more active. Let's break down some of the top 5 overall open sizable positions out here. It only cost you about, not even 5,000 contracts to break into the top 10 in UVXY right now, listeners, but that's going to be ticking up. And probably see that getting up there. Certainly the number 1 spot has ticked up. Number 5 out here is about 7,800 of the SEP 25 calls. Number 4, we're going out to Jan for pretty much everything else. Jan, 10,500 of the Jan 13 puts. Number 3, 12,400 of the Jan 10 puts. Numero dos here, 15,500 of the Jan 11 puts. And number 1 with the bullet in UVXY right now are the Jan 12 puts with about 29,000 contracts open. Now, that would not have been my first guess for the sizable position in VXX, but c'est la vie. That's what makes it interesting. Mr. Meatball, have you noticed a similar trend with your crazies in your Legion and your Pit Chat? Are they starting to gravitate more towards UVXY now that TVIX and others have gone the way of the dodo?
Well, we do use UVXY in our Volatility Edge product a lot to try and, show a opinion about long-term volatility in terms of we like buying puts and put spreads. So that's been a name that I've really liked. Most of our guys are pretty actively trading VXX right now because it is a really good, it's moving a lot and it is running a lot. And, I'm looking forward to someday it having a sister ETP that trades, that holds 30-day spike futures. That will be a fun back and forth between the two. So, hopefully that'll get moving once the spikes people figure out that they need to call their index Viking and get approved by the CFP, by the
That's all it takes. That's the magic wand of the Viking. It's all that will take to smooth it away. But it would be nice to see this universe of ETPs start popping up as well. We can start comparing and contrasting. Oh, how much fun. Then the show will have to be 2 hours, Shelly, at that point, once all these other ETPs start kicking in. What do you think? 2-hour vol views going forward?
I would love it. I would love to have the ability to talk about the spikes futures being listed, and we're excited about that. But if it takes an extra hour, that's great.
So much vol to talk about. You can't fit it all in an hour, listener. Speaking of which, there's a lot of earnings vol still popping off out there in the single name. So if you're just burned out from the macro madness, you want to focus on a little bit of micro, we got you covered still over there. TheOptionsInsider.com is the place to go. Our buddy Matt and his ORATS team have been cranking away on their earnings volatility machine. Just for you guys. You can get it over there at TheOptionsInsider.com completely for free. Analysis like this, Five Below popping off on the second after the bell. They were at 117, pretty much even going into their analysis, or I should say into their earnings. They were pricing in 7.9% from an earnings vol perspective, from a movement perspective. And guess how much they moved, listeners? 7.9%. Exactly in line. This has kind of been the narrative we've been talking about for a while out here. This one actually is a little bit bucking the trend. It was exactly even. Others have been very light from an earnings movement perspective. And you can see all of that, particularly if you switch over to the earnings season report. We also have that crunch there for you. Listen, I'm looking at it right now, and pretty much every week of this season has been blood red. I was talking to Matt on one of our shows earlier this month, and he said it's the bloodiest season he's ever seen since they've been crunching these numbers for options, volatility, and premium buyers out there. It's just a bloodbath. Week 1 was 56%. That means you only got about half of the movement that was being priced in from the straddles in week 1. Week 2 was 52%, so even worse. Week 3 was 74%, so all in the red. And week 4 so far about 92% out there. So far we get to have 1 week that's even north of 100, which means we got a little bit more in aggregate movement than they were pricing in. So yet another cycle, it seems like, where the option buyers, the vol buyers out there, not exactly looking pretty good. Let's look ahead really quickly to see what we have coming down the pike here. Still some decent-sized names. Lulu, they have the infamously sheer yoga pants out there. They were at nearly $400, $398 and a quarter as of the time of this report. They were pricing in $38.69. Lulu, quite lofty out there. And in the past, they've moved about 34 and a quarter. So actually pricing in a little bit of extra vol. As we've seen so far these last 2 seasons, that probably won't work out for them. Let's see. Work also at $33.65. They were pricing in $4.56. In the past, they moved $2.09, or almost double their straddle out there, which is also pretty hefty and also probably not going to make it. So I guess I'm just a cynic now after having seen so many names surprise to the unched category go for. But you can check it out for yourselves. TheOptionsInsider.com is the place to go. Meanwhile, we have to go right into our next segment. It is time for you guys to take the reins with your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol Voicemail, the portion of the show where you guys take the reins, your questions, your comments, just like this first one here from Option Selling Addict. I wonder how he likes to trade. I could never intuit that from his handle here. Option Selling, he's responding to a conversation we had on the show a couple of weeks ago, I believe, when we had the Thompson twins and a few others here on the show. I think it was Matt who came out and said, earnings and fundamentals are for boomers. He said, all that matters now is what the Fed is doing. An Option Selling Addict, he responded to that. He agreed. He says Schwab's rated F stocks, he says in parentheses, those are the worst, have destroyed the A-rated stocks over the last 52 weeks. True that. So apparently he was agreeing with Mr. Thompson there. I just like that quote. Earnings and fundamentals, that's for boomers. Who cares about that stuff? It's all Fed. all the time out here. Sounds like option selling addict agrees, and at least until yesterday, the market seemed to agree as well. Speaking of agreeing, our next question comes from Melisandro. I wonder if they're a Game of Thrones fan. Isn't that the red woman from Game of Thrones? She wants to know. It sounds like hopefully she doesn't curse me with her witch powers, if that's her. How do you think MarketWatch got it so wrong with their retail call options article last week? Love the network. Well, thank you, Melisandre. Yeah, we talked about this on the show last week as well. It was this article on MarketWatch. Options bets that the stock market will continue to soar have exploded to dot-com bubble levels. Obviously, we talked about that whale recently with SoftBank, but that was in an aggregate trade over time. That wasn't them just piling in. And we mentioned on the show last week, I wasn't really buying what this article was selling. I looked at the numbers myself during the show and after to see if that was the case. And if that was the case, if the bets that you have exploded, first off, they quoted SPX as being a retail-friendly product that was popular with like Robinhood Trader, and I don't think that will ever be the case. SPX is a huge, beefy contract. If they had said SPY, I would have listened more. I would have agreed with them more. And then also, they mentioned how options bets on the call side had exploded to .com levels. But if you looked at SPY or the S, both of which they were mentioned in the article, they were both sub 50th percentile for call implied volatility and for call open interest. They were both like 40 to 42%, which I don't think is hardly .com bubble level. So I did mention this. I did talk to Mark from MarketWatch this week, and I did mention my issues with the article. He's good. I think what happens a lot of times with these articles, Melisandre, is that sometimes people, they get a little bee in the bonnet. They see some data point somewhere, so they call up a reporter and they pitch him on this story, and the reporter runs with it because they think it sounds good. And I think that's what happened here. Someone obviously saw maybe a flurry of near-term calls and said, this is huge. Meanwhile, they didn't look at the overall macro numbers and crunch those numbers. If they did that, they would have seen that not so much. But still, interesting stuff nonetheless. Here's an interesting one here from Tom Selenden. He wants to know, do you think the listing of the new NASDAQ VOLQ product is showing a tendency toward going back toward the old school VIX methodology of, quote, just the at-the-money vol, please? Did the SIBO get too burned with all of that skew? I don't know if it's a trend, if it's just one product. I mean, it's not even listed yet. They're waiting for it to come out there. So this is the one product. This is, of course, the old Scott Nation's vol shares / SKUDEX / VOLDEX. And now it's rebranded as VOLQ. Obviously, it's now on the NASDAQ 100 as opposed to the S&P. And you're right. They have gone back to that old methodology of pretty much just at-the-money volatility. And we'll see if this one gets listed out there. I don't know. Mark, do you think this is a trend of people wanting at-the-money vol, or this is pretty much just a listener reading too much into one product, sir?
I think the listener's reading too much into the one product because the reason why the VIX is the way it is to match trading in over-the-counter variance swaps and different types of over-the-counter products that trade back and forth. And the VIX does an excellent job of hedging off some of those risks. Spikes will do the same, does do the same in the options. And so, I don't think it's a trend. If it was a trend, then the Miami people would have been out with their spikes that would have been more at the money. And I'm going to guess that Shelly will tell you his research when he was putting this product together said, nope, let's keep some skew and let's keep this kind of closer to a SPY variance contract because that's what our big customers are going to want.
Now, that's the weird thing about this, because when they first updated the VIX methodology, and obviously Spike's doing something similar out there looking at, I think there is merit to the skew information. I've never been just an at-the-money vol guy. Maybe I'm on the low end of the totem pole with that, but I always thought there is merit in that information, because a month is not just the at-the-money straddle. That's a good snapshot of what's going on, but there's things going on in the put wing, particularly in the indexes, and things going on in the call wing that you probably want to factor into that analysis. It's just a question of how you do it, right? And SIBO probably maybe had some issues with how they did it. Spike's obviously looking at ways to get around that, and so using that price dragging, because I think if you can find a way to actually analyze that in a proper way, that data has merit. I don't know, Mark, am I a crazy person? You think that data has merit as well?
No, it 100% has data. It's really important right now. If you look at the contracts, can you ignore 10% out of the money and 15% out of the money puts? I mean, the 3,000 put that expires in 2 weeks is $12. You want to throw that out? No. in October, it's even worse. I mean, you go, you're going to have data points that are extremely important to what's going on. I mean, the October 2000 put is $3.70. It tells you a lot about where risk is being perceived. And, to ignore skew is to essentially ignore most of the hedging activity because, frankly, most hedging activity does not take place in the 40 to 60 delta range. It takes place in the 35 to 10 delta range. When I was a floor trader trading SPX, and Mark, you'll say that, I'm sure you know this, when we were calculating our curves, we used like the 2 delta put, the 10 delta put, we used the at the money, we used the 25 delta call and the 10 delta call. We used that skew information because it told us so much about where people were trading. So, I think that SIBO has it right. I think the Miami people have it right. And, I get why a alternative, where it's more at the money could totally make sense in a NASDAQ 100 type of index. I think it's more useful in a NASDAQ 100 type of index. But, the idea that, don't get these things wrong. These products and indexes are modeled after what the big houses are using to actually trade. If there wasn't a VIX index, the big houses would all have their own internal, or spikes index for that matter. The big houses would all have their internal vol calculations, and they would all, to the T, be coming up with something very similar to the calculation that you get when you look up spikes or VIX.
Yeah, I was just crunching the numbers. I think it was a few sessions ago here. It was for our TWIFO program, so looking at the futures options, but the analysis is the same out there on just how steep the put skew is in some of these big indexes. I didn't do NASDAQ. I'll have to go back and check NASDAQ. But looking at the S&P, those 25 delta puts were about 30% premium to the at-the-money vol. I think there's value in that information. So you can't just discount the fact that these puts are trading 30% more than what the at-the-money vol is. Clearly, there's huge demand for that. So it's just a question of finding the way to analyze it. So, yeah, long answer to your question here. Who wrote that in there? Tom. Good question, though. Obviously, we can go on this for a while. We got to get to our final segment, though. But, good question, Tom. Obviously, I think we all lean on the fact that there is value. So the question of how you do it. And, for the NASDAQ product, you're looking at saying, let's just get rid of all that noise. Let's go straight at the money. That's what makes a market, right? People will want one, they want the other. Then you can trade both against each other. As we keep on rolling into our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the most difficult, the most dangerous portion of our program. Yes, it is the crystal ball. And this is, go figure, Mark, this is the 1 week. And I have been beaten down and beaten down and beaten down for pretty much the entirety of the last 6 months because I've been leaning higher. And this market has just laughed in my face. And the vol has laughed in my face just about every week. I don't think I've had a longer protracted losing streak on this show ever, which I actually am kind of proud of because this is hardly a rational market. So maybe that means I'm a little bit more rational. But, it's gotten in me so much now that I just couldn't bring myself last week to go as high as I probably want. I felt I was upside, and that was pretty decent premium. But you and Jim were actually above me, which is a rare moment here on the show. You were actually at 32 even. Jim Carroll, our guest last week in the MIAX hot seat, was at 28 and a quarter, and I was actually the lone guy on the totem pole down there at 27 and a half. How often does that happen? I just couldn't bring myself to do it anymore. Maybe that's the inflection point, listeners. The market finally broke me of my upside vol, and that was the moment it was waiting for. That was the contrarian signal. You should have bought all of the VIX upside you could have last week, listeners, because that was the moment the market was clearly waiting for, because coming into the end of the show now, VIX is almost at a 34. And Spikes is at 33. They're pretty much exactly even, both at about a 33.90 right now. So just a tick under 34. So, Mr. Meatball, you were the closest, still 2 points away, so outside our margin of victory, but you were 2 points low. How crazy is that out there in this marketplace? So I will allow you the honor, sir, of choosing when you want to go, either first or last.
I will go last.
How did I know? All right. So this is the week, like I just said, the market finally broke me of my crazy upside. So, of course, they had to deliver a lot of upside. And now we're at some pretty frothy, pretty interesting levels. Will we maintain this? Will we keep selling off? Will we trend higher? I'm going to say this time next week, we're going to be higher than we are right now, but perhaps not a lot. And obviously, it's going to take a protracted sell-off to maintain these levels where we are right now. But if we see some continued downside, as Mark put it earlier, I think the technical term is the spookage. That could start really sneaking into some people. Of course, if past is prologue, they're going to come in on Monday and buy all these tech names that have been beating up, and we'll be back to low 20s in VIX by this time next week. But I'm going to say we're going to be not that far away from where we are right now, which means we've still got a lot of vol in this market, and we've been moving quite a bit because we're sustaining these relatively elevated levels right now. So I'm going to say we're going to be next week 34.65. All right, there you go, Mr. Meatball. I set the table for you. Where are you going to sit down?
34.65 is what you guessed?
That is what I guessed.
All right. And I'm going to say, here's what's going to happen. All right. I think today right now we're getting a little stronger. I think things are going to soften up toward the end of the day. I think Tuesday could be ugly, but I think our buy the dippers will be back. And by this time, next Friday, we're going to be at 29.29.
I could certainly foresee that coming out. You know what's going to be the arbiter for this? I think what this means, Mr. Meatball, I think we need another Twitter poll to decide this. We're going to have to put that out there to our audience. Let you guys be the ultimate arbiter where you think VIX will be this time. Are you buying this sell-off? You think it's got some legs? Or maybe you think we're going to be in the old... If I know my audience by now, I think you guys are going to be buying a little bit upside. You're a cynical bunch. But we shall see. We'll put it out to you after the show, and we'll discuss it on next week's episode. All right. Unfortunately, that music means we've come to the end of another epic journey through the world of volatility. It was pretty epic this week. Crazy paper, VIX futures moving all over the place. We've got crazy numbers over there in MIAX, crazy discussion, questions about all things vol, crazy earnings. A lot of this vol everywhere you could possibly look. Talked even UVXY on the show today. If there's a product we somehow missed in the vol spectrum, I was only half joking with Shelly before. Maybe the show needs to be 2 hours if more products keep coming on the table. But if there's a vol product you love, somehow doesn't make it on the show, hit us up. We'll see what we can do about adding it to the rotation out here. Week like this is kind of hard because the big dog's taking up all the oxygen in the room, but maybe we can squeeze some in going forward. That said, Mr. Shelly, you guys have been pretty busy of late. You've been growing in all sorts of ways on the options volume front, on the corporate front. A lot of things cooking over there in MIAX land. If you want to leave our audience with any hint, any teases of what they can look forward to from you guys, or perhaps if they have questions, they want to reach out to you guys, where should they go? What should they do, Shelly?
Well, we look to continue to expand our footprint in volume. We're excited about the growth. As I said, we're about 15.7% market share right now and continuing to grow. You can check out anything you want to know about MIAX at MIAXoptions.com. And if you want to read about spikes, just MIAXoptions.com/spikes or click on the spikes links on our website.
There you go. MIAXoptions.com is the place to go between episodes. You get that cool little video of what the heck is spikes over there. You get the data, the press releases. You want to be the first one to know when the spikes futures are back. Check it out over there. It'll be listed there. You can even get a link to a cool show called Volatility Views. What more could you ask for from a web page, I say? Head on over there. MIAXoptions.com/spikes. And Mr. Meatball, if they want to learn how to analyze all these numbers they're getting from that website, where should they go? What should they do, sir?
Go to optionpit.com and sign up. I started saying, hey, we're about to get a major sell-off on Thursday. And, all the way up through about Tuesday, I said, hey, everybody, look out, look out, look out. So, just saying, If you want really good volatility and writing content, go to optionpit.com, give us your email, and you will not be disappointed.
There you go, optionpit.com. Sign up for the old email, and you too can stay informed. Maybe get nuggets like that and a whole bunch more. Maybe you want to debate the relative merits of the out-of-the-money puts and calls and the skew and the volatility equation. Hit him up over there at optionpit.com. I'm sure he'll be happy to debate you on that and much more. And on behalf of the greasiest of meatballs, and let's throw the rock lobster in there too, why the heck not? And of course, Shelly and all the crew over there in MIAX land, and indeed myself. I want to thank all of you out there for downloading, for streaming, for subscribing, for sending in your awesome questions, for voting in our forthcoming Twitter poll, which will be coming right after the show. Stay tuned for that. And we'll see you back here on Monday, of course, for the old OB kicking it all off again all the way through to Friday for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.